Traders have all kind of decisions to make. Do I go long? Do I go short? Should I move to break even? Should I take half my profit? Should I move my stop loss? Should I have a stop loss? All these questions and decisions traders have to make each and every trade. So in this video right here, I'm going to help you make the best trading decisions and teach you how to enter and exit like a pro. Let's go deeper. Hey guys, how's it going? JD here. So we're going to jump right in. So like I said in the intro, man, traders have to make so many decisions. You know, we got to decide what market to trade, right? There's options out there for us. You got, you know, futures, Forex, stock options, the stock market, binary options. I mean, there's a lot of decisions, you know. So after you choose whichever market you want to participate in, then you have to decide on a strategy, right? For those of us on this channel, if you're new to this channel, I teach price action trading. I use price action trading every day, and I trade several markets, all basically with price action trading. I have also combined price action trading many times with the fundamentals of Fibonacci retracement zones. So I like to try to combine those two to get the best entries, which is what this video is going to talk about. We want to talk about the best entries, and then after you enter, what should you do? So, you know, I recently released my second book, Increase on the Sudden Swing Trading the Forex Market. And see, the book is really based on price action, but it's heavily based on Fibonacci retracement zones. And in the book, I give a strategy for trading the Forex. And in that strategy, it's a mechanical strategy. Let me say that. It's a mechanical strategy. And the benefit of it being a mechanical strategy is that it takes a lot of guesswork out of the situation. Because that's what trips up many traders. You know, many traders, you could actually be in a winning trade. And then what you get to, because you're winning, you get nervous. You get too close, you know, you move your stop in too close, you get stopped out, right? And then you watch it go on for 2 more days, right? And then you're sick. You're just sick in your stomach, all right? Or you don't predefine your risk before you ever enter the trade, and you get into trade, and next thing you know, now you're moving your stop, you're moving your stop, you're moving your stop, and that your balance is going further and further and further against you. And that's actually the worst case. Not having a predefined risk before you enter a trade is a very easy way to blow out your account. So we're going to look at some reasons. We're going to look at some of the best entries, and then look at the benefits of trying to turn your strategy, whatever strategy you're going to use, into something that's very mechanical, so that you know exactly where you're going to get out, you know exactly how much you're trying to make, and you know exactly how much you're trying to risk. That way you can set things up to your advantage. All right. So first things first, though, if you are new to this channel, you may have never heard of what I call the market cycle. All right. And it's combined with something else that I call the rule of 2. So I'm going to draw it for you, for those of you who are new. All right. So basically the market moves like this. You'll get a trend up, 1, 2 legs back, and then a retest to a new high. Okay, you see that? Trend up, 2 legs back, retest to new high. This is what I call the market cycle. All right, this is how markets move. You can find this pattern all over the place. So you get, if you're coming down, you get a trend down, 1, 2 legs up, retest to new low. That's how it looks going short. Same pattern. This is what I call the market cycle. Okay, now if you will see here, we just had one going short. Trend down, 1, 2 legs back, retest a new low. Market cycle. All right. So what I like to do as far as entries, because we understand this market cycle, trend down, 2 legs back, retest the new low. Since we understand that there is a such thing called a market cycle, what I like to do, let's see here. I got a new toy, so y'all let me play with it a minute. There's some way for me to grab an arrow. Gotta figure it out. Thought it was right there. I could write some text with that. Sorry, I guess I should have played with this a little bit more before I started shooting this video. You know how it is when you get a new toy though, boy. All right, sorry. There's a way for me to grab it. I just don't know how to do it yet. This is an arrow. What I like to do, bam, got it, is enter right there, okay? So what I mean by right there is this. What I'm trying to do is catch the second leg of the market cycle. For me, for my strategy, that's one of the best entries you can take in trading, is trying to catch, you know, the second leg. Because here's the thing, these are also called measured moves. So let me delete some stuff here. From right here, oh, I still got it on arrows, well, that's okay. From this point right here to this point right here, that's considered one leg, all right, or measured move. And the thing about measured moves is, thank you, it's teaching me how to handle this thing. Thing about a measured move is typically you're gonna get another leg this same distance, which you kind of see we got right here. And that second leg many times is longer than the first, or it's the same exact length, or it just comes up short, but it's normally pretty close, okay? So how does that help us? That helps us in, man, that helps us in several ways. First of all, it gives you like one of the best entries you can take, all right? It gives you one of the best entries you can take. And what this really is, well, it's not clean. I'm not going, you would want this to be a second entry short. It didn't happen so clean right here, but usually if I just go back to drawing again, if we're coming short, right, you had a trend down, 1, 2 legs back, retest the new low, the market cycle. Well, what's happening is this point is normally the lowest point. This point here is normally a little higher. When you start to break right here to head down, that's normally a push up, first entry push up, second entry short, which second entries are some of the best trading entries you can take. And the reason they're the best trading entries you can take is because, as you see, it's the beginning of the second leg. Leg 1, leg 2. So when you catch a second entry short, you're actually entering the market at one of the best points you can. You know, you're trying to catch a second leg. So that's how you enter. That's how I enter. Okay, so I'm always looking for a trend, looking for a, you know, a trend break, and then I'm looking for the retest to enter. Now, here's the other part to that. What people don't really realize is, and this is how all my theory go together. So let's just look at this trend down, trend break, right? What people normally don't get is that this trend break is normally, or many times, a 50% retracement. All right, so many times this pullback could be 50% retracement. Let me see something. I'm gonna see if I can get real funky out here. Let me see something. Oh, nope, I messed all the way up. Messed all the way up. Sorry, hang there. Oh, it came back. Hang in there with me, people. All right, so what many people don't see is that this is normally a 50% retracement. So let me try that again. So what I'm saying is this, it would be, if you put a fib on it, oh, I'm getting techie out here today. All right, now, you know, I just randomly drew this, so I came up short of the 50%, but you see how close it was to hit that 50%. Man, I'm teaching. I hope you're picking up what I'm putting down right now. So what you don't realize is many times that pullback that creates the second entry short will be around the 50% 618 zone. That's kind of my confirmation of, or my way of knowing, like, yep, time to go, right? Because I'm trying to catch the second leg. And so once we get this 50% pullback, it's go time. So again, finding a good trend, right? Waiting for the pullback. And this pullback is just all the counter trend traders. And that's where most traders are going wrong. Most traders are not looking at the market from a wide enough view. You know, everybody is just bar by bar and zoomed in so close that you're not looking at the market from a wide enough view to realize that the dominant trend is down. Okay, yeah, you pushed up a little bit here. Yeah, we're pushing up here, but look at this leg. The dominant trend is down. Okay, for a trend to happen and go this long, big money, okay, started the trend off, and a whole bunch of smart traders jumped on the bandwagon and pushed prices way down here. And then they let counter trend traders, noob traders, people who know what they're doing, counter trend trade, go long in a clear downtrend. Okay, they let all the newbies go long in a clear downtrend, and then once prices get back to, you know, a nice level where they can make good money again, which is about 50%, you know, it comes back 56%, they're happy. All right, let's put our second order in and start the second leg down, because the market moves in twos. All right, the market moves in twos. So for instance, this is leg one, this is leg two. Even in a retracement situation, this is leg one, this is leg two. The market moves in twos. Okay, so this is very important information I'm giving you here. This is how to enter markets safely. All right, and so what you want to do is enter right here on that second entry short, head it down. All right, so understanding the market cycle, right, gives us an advantage on entries. So now let's talk about what you should do after you're in, right? Let's say you're in and you're winning, right? So let's say you took this, you went short right here. Prices is about right here right now. You're up, you got a win in the bag. What should you do, right? Should you use a trailing stop? Should you go in after every peak? Like for instance, say you entered here, right? You could keep your stop behind every peak back like this. And that's not a bad strategy. That's not a bad strategy at all. You just ride it down, stay back here, wait for the next peak, then move it down. Stay back here, wait for the next peak, then move your stop down. That's a actually pretty nice way to trail a trended market. But something else you can do, because we understand the market cycle and the rule of two, what I generally like to do is, because I know that this was leg one and I can measure the distance of this leg, I'm expecting another leg of that same distance. So I could easily just put a target down here at the same distance of this leg. So that's another way that the market cycle helps you create your target. Now that you're in the winning trade, I can just stay back and I'm not doing nothing until it hits my target. Now, at some point I might can move to break even, right? So, hey, I have no more skin in the game. You know what I'm saying? There's no way for me to lose. That's always a smart thing to do to get, you know, I could go to break even. Also, I could wait till maybe we're halfway down and hey, I could take half my profit off, right? And then let the rest run. And then I had no target here, just let the rest run. So, you know, once you're in the market, you have options. You have options. Or let me rephrase that. Once you're in a winning trade, right, you have options. But, you know, getting in the winning trade is you know, that's first. You know, get in it first. But once you're in it, what I like to do is, I like to just use the market cycle. Okay, so let's me keep on playing here. I'm gonna type this up. So the first thing you want to do, oh yeah, I like this new tool, is enter on the pullback, right? And take a second entry of some sort. Second entry long, second entry short, right? That's how you enter. Then once you're in that puppy, I would say, you know, have a target the same distance as leg 1. All right, easy. And if you do that, that's how you enter, that's how you exit, right? You enter on this pullback, boom, and then you exit when you get that second leg of the same distance. That's it. All right, now let's go look at some live examples here. See if we can see this thing out in, in the spirit here. Oh yeah, you can just, and I can erase quick. Lovely. All right, so if you want to learn price action trading, you can visit www.jdhyter.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. As I was just here saying, oops, let's see what color I want to use too. Let's go with yellow. Here was an example that I already marked up. We had a trend down, pullback, push down, another pullback. So I will be I will enter here, expecting to catch another leg of the same distance. If you entered right here, this was a home run. You would have won that. Psh, no problem. All right, let's go see if we can find some more. Oops, let's get this up the screen. Right here, this is trying to set up. I don't know what's happening here. Erase. I want you to notice on this one, we are trending. Oh, oops, I got eraser on. We are trending up. This was the trend up. Once we broke back under this EMA, see, we're above the EMA here, then we broke back under. This is the trend break. All right. This is the next push up. Here it comes back again. So now we will be waiting for something to trigger to say we're gonna do this. Now it hasn't happened yet. This is where you have to be patient and wait for it. Right now you got to push down first entry. We were waiting for another push down and then a sign when we get back above that EMA. That's the second entry long, but it's coming. You see how it's coming? See how the market moves in twos? It is coming. Hasn't made it yet on this one, but it's coming. All right, let's go somewhere else. Same deal here. Now this one is steep, but it still was happening. We got the trend up, boom, hard trend break, pushed up, but look, it's coming back right now, and we would expect it to come back to something like this, maybe something like that, and then boom, 1, 2. Yep, that was a little choppy. Let's go look somewhere else. But this is just how the market moves. I can just keep on looking. That's a big range. That's a range. That's a range. Got a lot of rangy markets right now. Yeah, this is a clear range. You wanna know how I know it's a range? Just at a glance. That's the top. That's the bottom. We're in a range. And when you're in a range, you just fade. The best entry is off the bottom. You buy here, boom. You sell here, boom. That's how you trade a range. Easy. I love ranges. They're easy. Super easy. Your entries are at the tops and bottoms. You just fade them. This one broke out of a range. Now, check it out. Same deal here. Trend down, trend break, try to go lower again, couldn't, pull back again. Now what it's doing, it's back trying to get out an EMA, and probably gonna do this eventually. Market cycle, rule of 2, leg 1, leg 2, leg 1, leg 2. It's all over the place. Now it doesn't look the same. You have to zoom out to see it, but it's all over the place. This is how the market moves. Here, so far, where are we in the market cycle? So far in this market cycle, we've had a trend up. Here's the first trend break. All right. Sometimes you don't get the 2 legs back though. Sometimes it just boom, like this. That's still a market cycle. trend up, trend break, retest a new high. It's trying. But when you understand the market cycle, then you know where you are in the market cycle, and then you can enter at the best opportunities. You can enter at the best opportunities. A lot of wacky trend going on here. Same deal here though. This one we may be able to see. You got the trend up, trend break. Try to go higher, couldn't. Came back. Now this one is steep, but it could very easily, bam, do that and make another leg the same distance of this leg. And it's trying right here. I mean, this is a nice, and this is a, oof, I should have took this trade. This is a low push up, higher low. I'm with this. This would be, what's the percentage on this one? 85%. This would have been a good go right here. But that's it. All right. So the market cycle, and like I said, the market moves in twos. If you need to see it, here it is. This is leg one. If it works out, this would be leg two. On the retracement, this is leg one. This is leg two. The market moves in twos. Okay, people, the market cycle is a real thing. Once you believe it, see it, and start to use it to your advantage, trading becomes so much easier. So again, just as a quick recap for your entries, try to take a second entry long, which in this case, if you come from the top here, is actually right here, push down, first entry, push down. Here's the second entry long right there. There, I mean, yeah, you start to come from here, push down, first entry, push down, right about here, second entry long, and it is working. It is working. And it's the beginning of what it's the beginning of, more than likely, another leg like this, about the same distance. I wish I had took this trade. So there you have it. That's how you enter. And as far as your exit, measure the leg of the first leg that you saw and expect to get another leg at that distance. So your target would be right up here somewhere. All right. I mean, if you had entered on this candle, you can move into profit right now, and you be locked in. If you're trading binary options, you have to decide how many minutes to go, right? You could count these up and be like, all right, man, I seen 10, 15, 20 candles in a row here. Psh, I could do a 10-minute trade and probably be fine. You know what I'm saying? Or if I get a higher low, man, I could have entered here on a 5-minute trade, probably been good. 3-minute trade, probably been good. 20-minute trade, probably be good. That's the beauty of this strategy. Every chart that I've shown here is a 1-minute chart. And so if you're in binary options, this is lovely, because when you know how long this leg is, you can set your expiration time to match that. If this was 20 bars up, hey, 5 or 10 minutes, you should be golden. All right, man, I wish I had taken this trade, but there it is, right? I know exactly what's happening. Do you see the power in that? Okay, guys, do you see the power in the market cycle right now? I know what's happening. We are getting a second leg, and then I also know where it should go to. It should go up here somewhere. That's the power of the market cycle, the rule of two, and price action. All right. So let me show you guys something. One last thing. Since this is happening live, just for my haters, do you guys think this made a 50% retracement? Let's talk about some stuff I teach in my book. Let's talk about combining price action with Fibonacci retracement zones. Do you guys think that went 50%? Let's see. Let's see. If you had to put a fib on here from the bottom to the top, if you had have done that, let's see what would have happened. Oops. Let's see what would happen if you had to put a fib on. From there to here. There you have it. Enter in the sweet spot. Take second entry longs. This was right off the golden ratio. Beautiful trade. It would have been a beautiful run, and we're expecting a leg of this distance. I cannot make this stuff up. I cannot make this stuff up. This is how you trade, all right? These are the best entries you can take, and the best way to exit, right, is to understand the market cycle, understand Fibonacci retracement zones, and get a grip on price action, aka the ability to read a price chart. All right, so that's gonna wrap it up for this one. I hope you enjoyed it. Remember, the market moves in twos. Remember the market cycle. And remember, you want to enter on a second entry, some type of second entry. Also, this higher low, which we saw work beautifully, or enter on a higher low. And then you want to set your target about the same distance of the leg that you drew, you know, the trend line off of, or the Fibonacci off of. That's what you want to do. And when you do that, you will begin to trade like a pro. All right, so this is a great time to like, share, and subscribe. I greatly appreciate you. And please, hey, if you enjoyed this one, hit me in the comments, show your boy some love. It really helps the channel. I greatly appreciate it. All right, so I'm gonna sign off with that. My name is JD, and as always, I wish you increase on the Sutton. Bye-bye. Hey, don't be mentally lazy. You got a little bit more time. Keep learning. Watch this video right here.